Federal government considers another tax exemption for small businesses. Kakovi to unveil support for business owners affected by NSAS mayhem. With importation gulps 2 trillion naira in 4 years, now focus on the program this morning will be on the October inflation rate in Nigeria as released by the National Bureau of Statistics, which saw headline inflation jump to 14.23%. This is Business Express reaching you from Abuja, Nigeria's capital, and I am Liakatun Babatunde. Government of Lagos State and some members of the organized private sector are putting heads together towards rebuilding the state after the damage done to public infrastructure and private businesses during the NSAS unrest. Vice President Yemi Osinbajo at the event says the state and indeed the nation will come out stronger from the crisis.
Serving and protecting the public is one of the noblest professions, and we are committed to upholding the dignity of all those who do this work. It's now time for the private sector, our international friends and partners, and all who love this city and this state to make their contributions to the rebuilding and reconstruction effort.
Similarly, the governor of the Central Bank of Nigeria, CBN, Godwin Emefiele, says the coalition against COVID-19 Kakovid would unveil its support for business owners whose outlets were looted by hoodlums during last month's NSAS protest. Emefiele, while noting that the Kakovid Alliance will over the next week be unveiling a blueprint that will provide details of the Apex Bank's planned support that positively affects households and businesses, as that measures to create millions of jobs for Nigerian youths over the next 5 years is an offering.
In an effort to support the government at enhancing the security of our nation, the Kakovid Alliance has committed to the rehabilitation and rebuilding of all the 44 police stations that were damaged as a result of the unrest.
The exemption of small businesses from the payment of tertiary education tax has been proposed in the draft Finance Bill 2020. This was disclosed by the Fiscal Policy Reforms Committee established by the Ministry of Finance, Budget and National Planning and chaired by the Special Advisor to the President on Economic Matters, Dr. Adeyemi Dipeolu. The Chairman Drafting Subcommittee and members of Fiscal Policy Reforms Committee, Ajibola Olomola, said the proposal for Finance Bill 2020 is to introduce an amendment to the Tertiary Education Tax Act to exempt small businesses from tertiary education tax. The Minister of Finance, Budget and National Planning, Zainab Ahmed, said the President indicated in his 2021 Executive Budget Presentation speech that the Finance Bill is to support the realization of Nigeria's 2021 revenue projections. However, in line with the federal government's objective of incentivizing small businesses, there is a need to introduce similar exemption for tertiary education tax, and currently all companies registered in Nigeria are required to pay tertiary education tax at 2% of assessable profits for each year of assessments. Finance officers in the federal government agencies, departments and institutions must be knowledgeable and up to speed with modern trends in public finance management for the actualization of financial reforms for effective gatekeeping. Minister of Finance Zainab Shamsuna Ahmed made this known in a message to a retreat for heads of audit in Kaduna.
Should emphasize at this time that internal auditors must be computer and IT literate and must be vastly knowledgeable in public finance management reforms and processes.
Now, Nigeria's headline inflation rose by 14.23% year-on-year in October 2020 as against 13.71% recorded in September this year. This is reflective in the Consumer Price Index report released by the National Bureau of Statistics. And Benny Adams, it is over to you for that report.
On month-on-month basis, the headline index increased by 1.54% in October 2020. This is 0.06% rate higher than the rate recorded in September 2020. The composite food index also rose by 17.38% in October 2020 compared to 16.66% recorded in September 2020. Core inflation, which excludes the prices of volatile agricultural produce, stood at 11.14% in October 2020, up by 0.56% when compared with 10.58% recorded in September 2020. Meanwhile, the rise in the food index was caused by increases recorded in prices of bread and cereals, potatoes, yam and other tubers, meat, fish, fruits, vegetable, alcoholic and food beverages, and also oils and fats.
Now, to take a deeper look at this report and its implications on the economy, I have joining me this morning from London, Lukman Otunuga. He is a senior research analyst at Forex Times. You're welcome to the program, Lukman.
Good morning. Thank you for having me here. It's always a pleasure.
Thank you. Now, at 14.23%, 1.54% from September, did you envisage this rise in headline inflation?
Certainly, we have to keep in mind that inflation has been above the Central Bank of Nigeria's 6 to 9% target over the past 5 years. And when we look deeper into it, the key themes that continue to drive inflation higher in Nigeria go from ongoing border closures, foreign exchange shortages, the increase in value-added tax, and of course the twice devaluation of the Nigerian naira this year. So when we add all these things together, it did make sense we saw inflationary pressures rise in Nigeria in October.
Yeah, okay, now food inflation has increased more than 17% presently despite efforts aimed at self-sufficiency. What are the fundamentals behind this rapid increase, and do you see them abating anytime soon?
I think this is a very interesting development, but when we look closer into it, I think Nigeria is dealing with a cost-push inflation scenario. So what's happening right here is the disruptions created by COVID-19 and the violent farm attacks have simply raised the cost of production and cost of raw materials. And when we add the fact that interest rates in Nigeria remain quite low, despite the efforts being enforced by the government, I think inflationary pressures, especially food inflation, are likely to remain a key theme in 2020 and possibly the early parts of 2021.
Okay, so we're seeing core inflation at 11.14%. Does it have anything to do with the recent protests and disruptions?
Keeping in mind how core inflation has also risen despite the exclusion of food and energy sector, I think it's the same theme that, disruptions have played a role, but I think it's due to a weakening naira and rising cost of productions amid the uncertain environment in Nigeria. We're going to expect core inflation and food inflation to continue rising for the rest of 2020.
Wow. So what are the implications of these numbers for Nigeria as the continent gets set for a free trade area come January 2021?
I believe in a perfect world, the fact that Nigeria has actually ratified the free trade agreement, which will come in effect next year, it's an incredibly welcome development for the Nigerian economy. But when we add the fact that inflation is rising and we look at the economics behind it, so domestically, rising inflation makes the local goods more expensive and less attractive to consumers at home. So meaning that consumers are likely to import their goods. So this may hit domestic producers, something that naturally will hit Nigeria's GDP in a medium to longer term. I mean, in a perfect world, this free trade agreement would have been good for Nigerian economy, but the fact that it's dealing with rising inflationary pressures, this is something that most likely will hit domestic producers.
Okay, so with the statistics before us now, can Nigeria afford another lockdown? looking at of course, the concerns around a second wave across the globe?
I don't think many countries can. The United States have already, the largest economy in the world, has already ruled out the possibility of a second lockdown. In the United Kingdom, we are actually experiencing a second lockdown right now, but the Bank of England have already warned that the UK may experience a double dip recession. So I don't think many countries across the world could actually afford another second lockdown. Now we have to keep in mind that the Nigerian economy is still nursing those deep wounds inflicted from the first lockdowns we saw in March. At the same time, when we add the fact that low oil prices remain quite depressed, I think a second lockdown may end up dragging Nigeria into a prolonged recession. So I don't think this is something Nigeria can do.
So now, despite these numbers, we've seen a massive boost in appetite for stocks, though the last two trading sessions were, of course, in the red. Give us an understanding of the fundamentals responsible for this rise.
Certainly, if you look at Nigerian stock markets, they've performed incredibly well this year despite the gloom and doom. The Nigerian All Share Index is up almost 30% year to date. This is quite incredible. But when we look deeper into the matter, I think we have to keep in mind that Nigeria's fixed income market is actually offering negative real yields due to the rising inflationary pressures. So investors are, parking their cash in the country's equity markets in the effort to get yield profit rather than parking their cash in an environment where they're going to receive guaranteed negative profits. So this is what's really driving Nigeria's stock markets. But I think in the short to medium term, stocks are likely to push higher due to the positive market mood we're seeing across the world, the fact that there's a hope that there could be a vaccine to COVID-19, the outlook for the global economy is improving. But I think eventually in the longer term, when we look at Nigeria's macroeconomic fundamentals and the fact that it still remains highly exposed to external risks in form of low oil prices, I think the gains we're seeing in the stock markets may be limited in 2021.
Okay, now when we consider from the market to the economic statistics, how do you see Q3 GDP figures looking like?
Right now, there's estimates, with how Nigeria is moving right now, estimates are ranging between -3% to -5%. Okay, slightly better compared to the -6.1% we saw in the second quarter of 2020, but it still signals that Nigeria's growth remains in negative territory. And the reason why Nigeria is likely to remain like this is because it's all about oil prices. In 2020, oil prices went sub-zero for the first time ever. At the same time, Nigeria has actually cut its oil production to 1.5 million barrels a day in an effort to move ahead with the OPEC quota. And when we add the fact that Nigeria's handsome chunk of export earnings come from oil and it's going to impact government revenues, this all together will negatively impact Nigeria's GDP. However, though, there is optimism that Africa's largest economy in the world may rebound in 2021, but that, of course, will depend on external factors.
Okay, so while we just keep hoping, what major policy actions do you expect in the coming months?
Unlike other central banks, in 2020, this is the era of low interest rates. Central banks across the world have been repeatedly unleashing a presidented monetary policy to stimulate the economy. But Nigeria is different because of inflation. So we saw that the Central Bank of Nigeria actually cut interest rates twice, but it's unlikely to cut interest rates further in 2021 due to the fact that inflation is continuing to rise. We saw the CBN enforce the loan to deposit ratio policy, and this was actually having good impacts to the Nigerian economy in the first few months of 2020. However, due to COVID-19 disrupting the payments of the loan and it hit credits, banks stopped lending to SMEs. So this is a policy that was effective before the rise of COVID-19. I think with Nigeria, even though monetary policy is an effective tool, we've seen that fiscal policy could be a sharper tool. And the Central Bank of Nigeria has actually distributed throughout 2020 roughly 3.5 trillion naira to support the Nigerian economy. I think this is what Nigeria needs, more fiscal policy to offer the critical lifeline to consumers and businesses until the cure to COVID is found. And the cure could be around the corner. It could be at the end of 2020 or sometime in 2021.
Oh, thank you so much, Lukman, for sharing your time with us this morning.
Thank you. Always a pleasure.
Thank you. Now, Nigeria has had its own fair share of the negative impact of COVID-19. That notwithstanding, entrepreneurs and small business owners are still striving to remain afloat. On surviving COVID-19, today, Boss Able spoke with an entrepreneur who survived the consequences of the pandemic. Stella Wugoage is in the beauty industry and a beneficiary of the CBN intervention funds.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
I'm a professional librarian, a fashion designer, and a makeup artist. For me, it's all about passion. I love beautiful things. I love beautiful women. I like to see ladies coming out looking flawless, looking beautiful. And that's what motivated me into going into the beauty industry. I'm looking up for a collection for the everyday woman who is going to the office. I decided to have a physical store, a store where people can walk in, because I realized that a lot of people were not very comfortable releasing their money for you to do stuff for them when they don't know where and how to locate you. I've heard about the CBN intervention funds, and yes, I applied. Did I get? Yes, I got. The process, I heard it through a friend, and she sent me the link. So when she sent the link to me, I applied. I went online, I went to their website to apply for the loan. Shortly after, I got an email and an SMS like follow-up questions, do upload this, upload that, and I was able to get the money. Did I do anything? No, all I did was to apply as a Nigerian citizen. What I do majorly is ready to wear, which require buying of fabrics. And before now that I didn't have enough capital, I wait until maybe when I get a client, then I'll source for money to go get fabric. But now what I do is I buy fabrics in bulk and keep, and then maybe make sample styles. So when customers walk in and see anything they like, they order, or may I do lots of pictures and post online. If I get orders on particular designs, I already have the fabric. So I save myself that stress of having to maybe go to the market to go look for source for that fabric. I had to get more sewing machines. I got a machine for weaving. I got a sewing machine and a weaving machine to ease my work instead of sewing and taking out to go and weave. For business, like we all know, we're just coming out of a pandemic which affected not just us in Nigeria here, but the entire world, the world at large. So things are beginning to pick up, I must say. We're not there yet, but then it's better than nothing.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
Quite inspirational there. Moving on, gold prices were little changed early Tuesday as concerns over spiking U.S. coronavirus cases and pressure from vaccine optimism brought about by positive vaccine trial. prices edged higher on Tuesday on expectations OPEC and its allies will extend oil production cuts for at least 3 months, while sentiment was bolstered by news of another promising coronavirus vaccine. Brent crude futures for January rose 16 cents to $43.98 a barrel, and U.S. West Texas Intermediate crude for December added 13 cents to $41.47 a barrel. Now the federal government is molding a new policy that will reshape the country's fish industry and create a platform for youth engagement. Minister of Agriculture and Rural Development, Muhammad Sabo Nanono, in a message at a national conference on fisheries, says the government initiative will also assist in checking smuggling, illegal and unregulated fishing. Musa Babalio reports.
At present, the global fish business stands at over $200 billion, with millions of jobs being created within its value chain worldwide. Even though Nigeria has a fish demand deficit of more than 2 million tons annually, the country, however, remains the largest producer of catfish in Africa. To this end, the new policy being proposed by the federal government is to provide enabling environment for fish business to thrive and create job opportunity for youths.
Towards increasing domestic fish production, create more jobs for Nigerians, narrow down the wide gap between fish demand and supply, reduce poverty, hunger, and malnutrition, and also reduce fish importation.
Before 2005, our production was less, but what we do now, there's a thing we put in place, we call it backward integration. All the fish importers to Nigeria, we are reducing the allocation. You must have a farm, so when you're exporting, for instance now, if you are bringing in 100 kilogram of fish, by next year we give allocation for 80, but we're expecting the farm you have to be expanding.
This is to be achieved in partnership with Fisheries Society of Nigeria, community and traditional institutions nationwide. Federal government and partners in fish business will facilitate the construction of fish house in Abuja that will serve as one-stop shop for investors.
The dollar notched losses on Tuesday as a return of coronavirus restrictions in some U.S. states and worries about a smooth transition for President-elect Joe Biden offset optimism about a coronavirus vaccine. Let's now see how the Naira is exchanging here for other international currencies. Now, stocks in Nigeria resumed this morning on a negative note after recording 2 straight days of losses. And away from home, Asia Pacific shares were mixed on Tuesday as vaccine hopes once again lifted Wall Street to record highs. Airline stocks got a boost. Boste Abel has details.
On the global scene, European stocks are expected to open lower on Tuesday, 17th November, despite a backdrop of more positive coronavirus vaccine. London's FTSE is seen opening 24 points higher at 6,421.29. Germany's DAX is 6 points lower at 13,138.61, and France's CAC 40 down 30 points at 5,471.48. Asia Pacific shares mostly rose by Tuesday afternoon as vaccine hopes once again lifted Wall Street to record highs. The Shanghai Composite edged down 0.25%, Hang Seng Index edged up 0.6%, and Nikkei also rose 0.42% after touching a 52-week high on Monday. U.S. stock futures were in negative territory on Monday night after 2 of the 3 major market benchmarks closed at record level. Dow Jones Industrial Average futures slipped about 100 points. S&P 500 futures were also down, while Nasdaq 100 future edged up. In Africa, stocks opened trade mostly positive. Bosude Ebu, Business Express.
And of course, this is where we end this edition of the program Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Also be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. Business Express returns Wednesday, 3 p.m. I am Lekatun Babatunde saying, be safe out there.